Welcome along everybody to this Monday afternoon market recap. In the world of financial markets and technical analysis, in the the application, as at the current juncture, I am relatively softly spoken when it comes to talking about trades, trade results, winning trades and also losing trades. But as at the close on Monday, it is important that I go through and just recap some of these commodity trades that we have been positioned into. It's something that I've spoken about over the past maybe 1 to 2 weeks. This has been made public again on the YouTube channel here at Pivot Point Trading. What I'll be doing is speaking about gold and silver and also the US dollar, because a lot of what I spoke about over the weekend and also talked about in public videos posted on this YouTube channel have more or less materialized as at the close on Monday. On top of this, and going back to the narrative of what I spoke about over the weekend in terms of what to look out for in market structure, it looks as though our forecasting, or at least our analysis, the application of technical analysis is once again coming true. That, of course, or what I will be doing to sort of round out this video, I'll be referencing the industrial average, the S&P and the NASDAQ. I will also take a quick look at a stock outside of our top 12 list, because it's something that I spoke about in terms of a trade setup also, which has played out very, very nicely. So what I'd like to do for you now is just recap this gold short that we've had since about mid-June. Our original entry on this trade was 119.27. I spoke about how gold up and around this location was moving into no man's land, and the reason for that was because we started to overshoot this downward weekly bearish trend line, which has been in effect since 2011. Very, very important note to make if you are interested in the commodities markets. Now, we broke this down very, very simply. We were saying to ourselves, as long as gold remains below this extension, this red line extension, you have to remain relatively bearish on gold and look for potential opportunities to enter into some of these put contracts traded on ticker symbol GLD. Now, just to go into this trade and to recap this trade, we had one entry at 119.27. We had a secondary entry at 118.91. And then we even had a third entry at 117.78. Now, obviously today we sort of gapped over that third continuation entry, but if you were positioned at any of one of these two entries, you can see the price action today down almost $2 on the ETF alone. It hit our first target at 116.44. It appears to be blowing through it. And the secondary target, which I was speaking about, which I assume is going to take a lot of people by surprise, is all the way down here at $110.73. Now, I'm not going to say that this is going to happen over the next 1 to 2 weeks, but if we definitively crack this little swing low over here, dating back to the beginning of May 2017, then pencil this number down. Write it down in pen, because 110.73 is going to act as a magnet if, in fact, we can break below this intermediate support for gold. At the moment, it appears as though we are still holding above these consecutive high lows, but if we take out this relative swing low in early May 2017, watch out below, because gold is going to continue to decline in price. Detach yourself emotionally from the charts. It's very important that you do so, especially if you are an active trader, because if you do not do that, if you cannot disconnect emotionally from entering into trades, it's going to get you into a lot of trouble if you can't see through the fog and through the murky sort of waters that pronounces itself in the world of financial markets and in the world of behavioral finance, applicable to that of charting. Now, on top of that, also, silver has worked out tremendously well. Personally, I only had one short on this. This was at 15.92, again, dating back to more or less that same trading session when we started to see the break of this little swing low over here. Taking off from this dark cloud cover candlestick over here. And again, it's taking the formation of a very, very bearish actual continuation trend on the intermediate and also the macro picture. We came back, we retested the pivot point at 15.92, but you can see today, Monday, elevated volume. The bottom fell out of silver, down 43 cents. You might be saying to yourself, well, 43 cents isn't the biggest of moves. Yes, you are correct. However, in terms of percent in a single day, just doing some quick maths here, I don't have the percentage in front of me. I assume it's somewhere between 2 to 4%. On the daily net move for silver, again with those derivative contracts, if you're using puts, if you're trading ticker symbol SLV, that has been a tremendously profitable trade, and you should congratulate yourself on placing such a trade. The secondary target, which I personally have in my own account, is down here at $14.90. Obviously, I assume that we are going to stop and slow more or less where we currently closed at on Monday. think it's a little bit naive and a little bit foolish to assume that silver and gold are both just going to, rocket through this current support that we find ourselves based at. Who knows what happens next? Potentially we might run back up and produce, the third consecutive lower high relative to where we were, earlier on in 2017. This is still a potential. But if we do crack this area, 110 and then all the way down to 107.62. Now, on top of that, I wanted to speak about the US dollar. This is something that I've been looking out for today, more or less. We have done is what I was expecting, more or less. You can see here this long day Morobozu candlestick. This is Monday's trading session. Now, we closed up 62 cents on the dollar index. What makes this interesting is that this is exactly what I was speaking about, and it is showing up right at the logical location. And again, I was speaking about how sort of novice traders. Again, I was once a novice trader many years ago. But this is where a lot of people would have been jumping in bearish a little bit foolishly, just to use that expression again. However, what we have been left with is what we call a morning star reversal candlestick. It's a 3-day reversal pattern. We saw this little whipsaw below the macro swing low over here, or that macro horizontal support, and it looks as though we are going to see that strong reversal, which is what I've been speaking publicly and privately about in that pro analysis class. So it looks as though the dollar is confirming a knee-jerk reaction. It does look as though it is about to move to the upside quite aggressively. And that is obviously going to put downward pressure on gold and silver, which fits into our little hypotheses here. First of all, hitting our targets, but also potentially moving considerably lower as well. And it's something that you should be thinking about because it is very important to understand that intermarket relationship. Now, a secondary trade, which I spoke about, this is one which I referenced maybe 1 to 2 weeks ago. I did some additional analysis on the YouTube channel. There was 2 parts. The first part was Disney through HD. That also included Facebook. And then part 2 was LUVMU. And we finished with X, which is United States Steel Corp. Now, the first stock out of these 6 shares that we went through, it did trigger at 105.70. And we did on Monday hit our target at 108.21. So I did receive a few emails of people jumping into this in real money, in real accounts. I wouldn't encourage people to be doing such or doing so if they're somewhat new to technical analysis and if they're just trying to sort of find their feet in the markets. Generally, it does take a number of years, truly and honestly, to find your feet, to really sort of navigate financial markets proficiently. What you do between now and then in terms of your own education and learning is completely up to you. But I just wouldn't recommend anyone acting on these. If anything, just do them in virtual accounts. It is never specific investment advice. This is always general educational advice, or for, educational purposes. And if anything, you should use the analysis to help hone your skills and also to do this in virtual trading accounts until you feel comfortable enough to start walking slowly or progressing or stepping into the real world game of trading the financial markets. On top of that, I did not enter into Facebook. You can see I had a default line. This is for a real trade to the upside at 157.32. We did not trigger. Whenever you see a dashed line on my screen, it means that yes, it makes sense to actually get into this trade. But if it is a dotted line, it means for whatever reason, I will not be moving into it. And the reason for this, and for me not being in Facebook, even though it is profitable, is because it is counter trend. And it looks as though Facebook is trying to break the 50, or it has just closed below the 50. But whenever you trade counter trend to the underlying intermediate or macro, sort of the bigger fractal of the trend itself, it comes with additional risk. And it's something that I will simply sit out of and not really allocate my own personal capital into, even though if it is somewhat of a high probability of a favorable trade result being produced. It's just simply something that I can now sit back and say, look, I just don't want to allocate my own personal capital, but Facebook is looking relatively good. HD isn't really doing all that much. We didn't have a trade set up after I produced that analysis for you, so we're sort of just waiting on that. LUV has been sort of interacting around 62.55. Again, we pushed up above it intraday on Monday, but we closed down 7 cents. So, I mean, it isn't really going anywhere. MU has had a tremendous down day off from resistance at 32.30. We'll monitor that stock as it progresses, and also X. I mean, it's floating with that breakout at 23.26. Now, moving into the actual, indices right now, I mean, this is quite interesting because over the weekend we were speaking about how the markets were looking to actually retrace, and we were looking, or at least our sort of outlook or forecast for the week ahead was to be patiently bullish. However, to consider the markets pulling back. I mean, that was, if I can just sort of condense this down into a number of sentences, short term we are relatively bearish on the market. For a number of reasons which I won't go into in this particular analysis, but long term we are still bullish on these markets. Now fast forward to what happened today, the Dow Jones Industrial Average during the trading session, it's high. If you pay attention to this figure just here, okay, the high of the candlestick was 21,562. Our additional re-entry was 21,566. So we were not actually positioned or triggered into this account or into this trade to take on additional diamond positions. In fact, we were almost left with a shooting star candlestick. When I saw the beginning of the construction of this candlestick, I was a little bit dismayed. I was a little bit surprised because myself, even over the weekend, I made this very clear. I am expecting the markets to pull back. This now looks and fits the profile of that of a hybrid shooting star. So we are seeing an upper wick. This is selling pressure, and it continues to build in conjunction with a lot of other candlesticks that are building since this gap exhaustion over here. So please pay attention to that on the Dow Jones Industrial Average. Obviously, on the S&P 500, we have what we call a textbook shooting star candlestick. Although we did close up 5.5 points, the candlestick itself is relatively bullish, again with that upper wick, which is quite interesting. And the NASDAQ of the three markets closed down definitively, closed down 30 points. We have a relatively long day Morobozu candlestick, and it looks as though, again, our initial suspicions, our original hunches on the market are starting to play out. Obviously, tomorrow the markets will be closed in observance of the Independence Day holiday in the United States, the 4th of July. So I just wanted to say, enjoy your time away from the market. I'll be back later in the week to recap some of the price action. But until then, everybody, stay safe out there. Enjoy tomorrow if you do reside in the United States. And I'll be back with you, later in the week. All the best, everyone. It's James signing off on behalf of Pivot Point Trading. See you next time. Goodbye.